What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we saw another bullish breakout in the stock market with the S&P 500 at brand new closing all-time highs and knocking on the door of brand new all-time highs altogether. How much higher will we go for the year 2021? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also, just a quick update, I will be running a Black Friday special on Bank Trade Alerts where you can get 67% off your first month. All you need to do is when you're at checkout, apply the coupon code Black Friday as one word and you will get 67% off your first month. So if you still haven't tried Bank Trade Alerts, now will be your best opportunity to get the best discount possible. Here you can see that Bank Trade Alerts is up 7.4% for the last month, and for the year we are now up 39.23%, still beating both SPY and the triple Qs, so outperforming the market. You can also see that Bank Trade Alerts does well whether it's a bear market or a bull market, so you'll never need to worry about turning a profit no matter if the market goes bear or remains bull from here. So now is the best time to try Bank Trade Alerts if you still haven't tried it, and all of the details on how to join and how to apply the discounted coupon code will be in the description below. Alright, so jumping back over to the S&P 500, we can see that we did get that bullish breakout today after we did get that sideways consolidation where we were cooling down and consolidating some of the newfound gains. So SPY was up 0.4% today, closing back above all the moving averages, and you can still see we are in this very strong bull trend. Remember, each and every day that goes by, that 20 simple moving average continues to rise, so our critical support level is now at SPY levels of right around 462. So the bulls are in full control and there is a ton of support below to maintain this bull market. If we do start breaking below our 20 simple moving average, you will want to be a lot more cautious because that means we could be coming back down to the 50 EMA, which is going to be right around 453. But as long as we're above this positive sloping 20 simple moving average and we have this strong bull trend, you want to remain bullish because the stock market is still incredibly bullish. You want to capitalize on these opportunities because while the market is bullish, you never know how hot the market can run before we finally see another pullback or a correction. And you can see we are knocking on the door of brand new all-time highs. And today we did have a new closing all-time high for SPY. So this is still an incredibly strong bull market and we continue to form brand new all-time highs. So the bears continue to try to call a top and they continue to get this market wrong because they're not staying objective. When you have bullish price action and you have a bullish trend, you need to remain bullish no matter what noise is around you telling you that the market can't possibly go higher. Because as you can tell, the market doesn't care what we think, it just continues to defy gravity and just continues to go higher. Yes, there will be a time and place where that changes, but we will see it in the technicals and we will see it in the price action and we will adjust accordingly. So right now, SPY is about to attempt to break out to a new all-time high, which means you're going to have resistance right around 470.6. On a break above that, our next price target is all the way up there at 477. And yes, we can go higher than that for the year 2021. However, as you know, I like to take it day by day. And unless we're doing macro technical analysis, I want you to pay closest attention to the most immediate resistance. So don't look past 471 until we break above that level. And then you can start pointing your eyes up here to 477. So right now, the bulls need to prove it by breaking above that level. And then you will want to start looking for that run to 477 on SPY. To the downside, we have critical support right around 467, 464, and 462. And if we start breaking below 462, you need to get a lot more cautious because we could be going back down to the 450s. It's completely normal to see price action coming back to the 20 simple moving average in a bull trend. So don't rule out the possibility that we could get rejected from this all-time high and still come back down to the 460s. I don't expect that to happen, but don't rule it out as a possibility. I think the most likely scenario is a continuation of this bull rally, and we will more than likely see a breakout to new all-time highs, especially after this week is over. So if we don't break to a new all-time high this week, I think there's a great chance we break to a new all-time high next week. You can still see the volume is very low, which does favor the bulls because we don't need to worry about a stock market pullback or a stock market correction until we start to see high volume selling. We don't see high volume selling, so it's still going to be the bulls taking the stairs up, which you do expect to see happening on lower volume. Jumping over to the NASDAQ 100 triple Qs, we were up 0.71% today, and again, we had a very bullish day. We're starting to break out of this consolidation, and we're starting to see very bullish price action, and we also still have the very strong bull trend. We're going up on low volume, which is completely normal for the bulls to take the stairs up, and our next resistance level on the triple Qs will be at 398.68. Above that, we're looking for a reattempt to break out of the previous all-time high at 401, and then our next price target on a break above that all-time high will be a brand new all-time high just below 410, right around 409.6. To the downside, you want to watch for support levels right around 394, 392, and 389. Right around 389 is going to be your 20 simple moving average. So if we break below that, it will be a little more cautious to the downside because we could be coming back down to about 380, which is where our 50 EMA resides. So overall, you can see this is still a very strong bull trend and the price action is looking very healthy because our 20 simple moving average is now catching up to the price. Anytime we get too far extended away from that 20 simple moving average, it could lead to a pullback. But now we have the price action just above our 20 simple moving average, so we can continue to climb from here. Don't rule out the possibility we come back down to the 380s before breaking out, but right now the price action is telling us it wants to try to break out now, so continue to watch that previous all-time high right there at 401. On the Dow Jones, we were up 0.19% today with the price action still closing above all the moving averages, and we still have the bull trend. So we still see bullish price action and trend across the board in the indices, and it also does look like the Dow Jones could be attempting to break out to a new all-time high, so watch that resistance at 365. On a break above 365, our price target for the Dow will be at 372, with downside support at 361 and 360, and our 360 support would be our breakdown level to retest the 50 EMA, which is going to be right around 355. So everything still looks bullish in the Dow, so expect to see new all-time highs as long as we can maintain this bull trend and stay above 360. In the Russell 2000, we were up 0.18% today, and we still see the Russell 2000 consolidating, and we did not get a bullish breakout like we did in the rest of the indices. However, the Russell 2000 is more than likely right behind, so look for that breakout above about 239 to 240 to send the Russell 2000 to that next leg higher, which could bring the Russell to 245 and possibly even 250. Those are going to be strong resistance levels, so watch those levels closely, and we will have to break back above the previous all-time high, which is right around 244, so watch that level as a possible minor resistance as well. To the downside, we have very strong support right around 237 and 236, and as you can tell, our 20 simple moving average will be crossing back above 234 as soon as tomorrow. So each and every day that goes by, it looks less and less likely that the Russell 2000 is going to retest the breakout level. So don't necessarily see the Russell 2000 pulling back to 234 or 232 because each and every day our critical support continues to rise and that will push the price action higher. So right now it looks like the Russell 2000 might hold this local low at 236 and then break out and form another new all-time high. So this could be the buying opportunity of the dip in the Russell 2000. You could see the trend is still very strong and very bullish, and we did get a macro level breakout. So once the Russell 2000 starts to run from here, it could go for that next leg higher and could even push to about 260 to 257. On the ARK ETF, we were up 1.18% today, and we did see ARK breaking back above the 50 EMA. And remember, we are looking for this potential inverse head and shoulders that we're closely stalking, waiting to see if the ARK ETF can break out. The breakout level will be on a close above 126, and that will bring us to our next price target all the way up there at 143, with resistance on the way at 131. So for this inverse head and shoulders, you want to make sure this right shoulder holds above the head low, which is right around 107. So look for downside support at 115, the gap close at 113, and support right around 110. If we break down below 107, we know the inverse head and shoulders is invalidated, and we're no longer looking for a breakout to bring us into the 140s. Now, if we get a break above 126, that's your validation that this is a confirmed pattern, and you will want to get a lot more bullish on ARK, and we will regain the full bull trend very quickly. So overall, this is still looking like a valid bullish pattern, so continue to watch these critical support levels and watch that breakout level at 126. On the VIX, we were down 0.78% today, and we continue to see the VIX heading lower as the stock market heads higher, so this is going to tell us to expect new all-time highs. Remember, as long as the VIX is below 18.2 and doesn't close above 20, you want to stay bullish and buy the dip. If you see the VIX closing above 20, get a lot more cautious because we could be going through a deeper correction than I expected, and we could see a pullback that takes us back to the 50 EMA or possibly even lower. But right now, the VIX is not doing that, and it continues to close below 18.2, so look for the possibility the VIX is heading back down towards 14 as the stock market breaks out to new all-time highs. On Bitcoin, we're currently down about 5%, and we did see Bitcoin getting below our 20 simple moving average, but so far we're still holding up above the 50 EMA, which is our next critical support. So Bitcoin did break out to that new all-time high, and now it's starting to cool down, and it's going to the two support levels that we expected at 63,000 and 59,000. Now, as long as Bitcoin stays above 59,000, you can buy the dip. But if we close below 59,000, you will want to be a lot more cautious because we could be coming down to the previous high, and we could see Bitcoin coming back down to 53,000 as it continues to consolidate and go sideways before breaking out yet again. But right now, I think this is still a buy the dip market in Bitcoin. Even though we are losing the bull trend in the short term, this is a nice healthy pullback that could allow Bitcoin to cool down before that next leg higher. Remember, our next leg higher is either going to take us to 75,000 or 86,500, and then we will want to get a lot more defensive because Bitcoin is very likely hitting a very critical peak, and we could see a big correction in Bitcoin. But right now, I'm still bullish on Bitcoin as long as it's above 59,000, and as long as we're above 59,000, you want to buy the dip. If we break below that level, look for the next buy the dip opportunity right around 53,000. On Amazon, we were down 0.14% today, and we still see Amazon consolidating below resistance, and we still do have the strong bull trend. Remember, we're looking for that breakout above our resistance trend line right around 3,600 to bring us to our price targets above at 3,700 and 3,760. To the downside, we have support at 3,500, 34.52, and our 20 simple moving average right around 34.40, and below that we have the 50 EMA, which is now right around 34.20. So there is a ton of support below with the full bull trend, so you can buy the dip on Amazon. The bullish breakout will be on a breakout above 3,600, and it should be a quick trip to the 3,700s once we do get that condition. If we break down below 3,400, you need to get a lot more defensive and a lot more cautious because we could be coming back down to 33.11. On Tesla stock, we were up over 4% today, closing back above that resistance level at 1050, but still below our 20 simple moving average, which is right around 1072. Right now on Tesla, we are still holding that critical low, which is right around $988. If Tesla breaks below 988, look for a quick trip back to the 50 EMA, which is now sitting right around 938. Below that, look for the full gap close at 911 and the support level at 900, and I don't expect to see Tesla breaking below 900 at this time. I think the highest probability chance is to test the 20 simple moving average as resistance, and if we break above that level and close above 1080, then we can start talking about the gap close up here at 1208. But wait for that breakout above 1080 before you get overly bullish, and do keep in mind that Elon Musk is still more than likely selling a lot of his shares, so that will continue to put downward pressure on the stock. I'm not saying that guarantees the stock has to go lower, but you do want to be cautious of that event. If we break back above 1080, I think you can get a lot more bullish, and if we break back below about 988, I think you need to get a lot more cautious. So be bullish above 988, and then you can start looking for more upside above 1080. On Apple stock, we were up 0.67% today, and we see Apple stock looking very bullish and very close to regaining the full bull trend. The price action is back above all the moving averages, and we're staying above critical support right around 149 to 150. Remember, as long as Apple is above 147, you want to buy the dip and you want to get ready for that next leg higher. The bullish breakout will be a close above 152, and that should allow Apple to retest the previous all-time high at 157. Above 157, look for the new all-time high price target at 162, and remember, if we break below 147, get a lot more defensive because we could be coming back down to 144 or 139. But right now, I expect to see Apple staying above 147 and continuing to climb higher. On the financial sector, we were down 0.1% today, and we still see the financial sector consolidating, getting ready for that potential next leg higher. Overall, it still looks bullish, and if we do break down from here, look for a retest of the 50 EMA. On the industrial sector, we were flat on the day, but we still see bullish price action and a very strong bull trend. The healthcare sector was up 0.42% today, and we did get a bullish bounce off the 20 simple moving average, and we do see bullish price action and bullish trend. On the energy sector, we were up 0.16% today, back above the 20 simple moving average and regaining the bull trend, which means the energy sector could be getting ready to go for another leg higher. So jumping back over the S&P 500, this is still a very bullish market across all of the sectors with both price action and trend, so you need to stay objective and you need to stay bullish. Remember, we will see something shifting in the price action first, and that will be a close below our critical support levels. As long as we're staying above critical support and we have the very strong bull trend, you want to stay bullish because this market is likely getting ready to go for another leg higher. Once we get to our next set of price targets, if we do get there before a pullback, then we can start getting a lot more cautious and getting more defensive and start raking in some of those profits and locking them in. But right now, you want to stay bullish as long as we're getting a very strong bull market, and don't let the noise scare you out of your positions, and don't let the noise cause you to try to short this bull market. Don't bother trying to short this bull market because the odds are against you, and we go higher in a bull market much more often than we go lower. So go with the easy trade, which is the long trade, because you're more than likely going to see the stock market go up much more than it goes down in a bull market. Don't bother trying to short a bull market just because it's going higher, because by definition, bull markets go higher and bull markets continue to form new all-time highs. Don't think new all-time highs are bearish. They're quite the opposite, and as we continue to form new all-time highs, it just proves how bullish this market really is. Also, don't forget about the Black Friday deal that I am running on Bank Trade Alerts, where you can get 67% off your first month. Bank Trade Alerts only trades TQQQs, and it is a trade alert service that sends you all your buy and sell alerts directly via email and text message. You can find out all of the details about the Black Friday deal and how to join Bank Trade Alerts by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.